Okay, let's dive right into this. Welcome to this explainer. And let me just tell you right out of the gate, what we're covering today is literally the absolute key to total financial clarity. If you're serious about getting unbreakable control over your business metrics, you are in exactly the right place. We're going to completely upgrade how you look at your business's performance. So get focused because we're unpacking the ultimate framework for financial mastery, accrual accounting.
So let me ask you something. Are your bank statements lying to you? I know it sounds a little dramatic, but the reality is if you're relying purely on your bank balance to tell you how your business is actually doing, you've fallen into a really dangerous trap. This is what we call the cash basis illusion. You know, it's comfortable. It's super easy. You look at cash coming in, cash going out, and you think you know your profit. But it totally hides the real high-level performance of your business. It creates these massive blind spots that basically prevent you from scaling and actually understanding what's truly happening under the hood.
The difference between these two approaches is just night and day. On one side, we have cash accounting, basically the amateur way. It only tracks cash movement, and because of that, it creates this chaotic nightmare of timing differences where your income and your expenses are completely disconnected from the actual work you're doing. But then on the other side, we have accrual accounting. This is the mastery way. Accrual accounting doesn't even care when the cash moves, it tracks reality. It records the fundamental substance of a transaction exactly when it happens. It gives you this neat, completely objective, and perfectly accurate truth. Think about the absolute biggest powerhouses in the world right now. Apple, Amazon, Google. Pretty much every major household name and incredibly successful enterprise has one massive thing in common. They all use the accrual basis of accounting. If you want to play at the absolute highest level, you simply cannot use an amateur scorecard. You have to use the exact same financial framework as these global titans. Now, to understand exactly how the titans do it, we need to talk about the golden rule. It's called the matching principle. Let this really sink in for a second. Revenue and all the expenses you incurred in order to generate that specific revenue must be recognized in the exact same accounting period. This is the sacred, unbreakable rule of true business mastery. You absolutely have to align the effort with the reward, totally regardless of what your actual bank account is doing at that moment.
All right, let's see accrual in action. Here is rep number 1, the cake business breakdown.
Imagine this timeline for a second. In September, you go out and buy cake ingredients for $10 cash. Then, on October 25th, you bake and sell that cake to a customer for $25, but they have 7-day payment terms. So you don't actually receive that $25 in cash until November 1st. If you're using that amateur cash basis we talked about, your books are going to look completely insane. You'd show a fake $10 loss in September, a completely flat zero month in October, even though that's when you did all the actual work, and then a fake $25 profit in November. It's a complete timing headache that makes analyzing your actual performance impossible.
But look what happens under accrual accounting. Your breakthrough number is $15. By applying that matching principle, we record the actual substance of the transaction. We record the $25 revenue in October because, hey, that's when we earned it by handing over the cake, and we pull that $10 ingredient expense into October to perfectly match it against the revenue. Suddenly, all that chaos just clears right up. The matching principle reveals our true, objective $15 profit exactly in October, which is the exact month it was truly earned.
Moving right along to rep number 2, crossing the financial year boundary. Let's see what happens when transactions cross massive financial deadlines.
Let's fiercely track the logic on this one. Say your financial year ends on March 31st, okay? On March 27th, so still in financial year 1, you sell Mr. Nikhil a high-end shirt for $5,000 on credit. He then pays you the $5,000 cash on April 5th, which pushes us into financial year 2. So, where does the sale actually go? Listen closely here. That $5,000 revenue belongs entirely in financial year 1. Why? Because the transaction actually occurred in year 1. The contract was executed, the shirt was delivered, the revenue was earned. This is utterly independent of when the cash finally clears your bank in April. The cash is just the settlement. That earning happened back in March.
We can reinforce this logic perfectly with a couple more examples. Let's call them the time splitters. Imagine you receive a massive commission payout today in cash, but it's actually for work covering 3 separate years. Accrual mastery means you don't just lazily dump all that revenue into today's books, you divide it up and assign it to the specific years it was actually earned.
Or think about airlines. This is a great one. When you buy an airline ticket months in advance, they get your cash immediately, but they do not record that as revenue until the exact day you actually take the flight. Mastery means putting the money in the specific time period the service is actually delivered.
Okay, rep number 3, the unpaid rent reality. Let's look at how we deal with expenses when your bank account hasn't moved a single cent.
Let's just break this down step by step. Imagine it's December 31st. You have lived and used your business flat for the entire month, but you're completely out of cash and you cannot pay the landlord. Under a cash mindset, you'd record zero expense. But guys, that's amateur hour. Step 1, you consume the flat's benefit. Therefore, step 2, you absolutely must incur the rent expense in December. Your profit goes down. And because no cash actually left your bank, step 3, you record an outstanding rent liability. You owe the money. You use this space, so you absolutely have to record the expense and the liability right then and there.
And we can see that exact same concept play out at a much larger scale with employee salaries. Say an employee worked for you for a full 12 months. Their total negotiated salary for the year is 6 lakhs. However, cash has been kind of tight, so you only actually handed them 4 lakhs in cash during the year. What's your true business expense? It is not 4 lakhs. Your true expense for the year is 6 lakhs because they worked the full year. You record the 6 lakh expense, the 4 lakh cash out, and that remaining 2 lakhs gets legally recorded as a liability, money you still owe. This gives you a flawless, totally accurate picture of your real obligations.
Now let's flip it around and look at an advanced cash trap, getting paid too early. Imagine you run a catering business. In month 3, a customer happily hands you a $200 cash advance for a party you're going to cater for them next month. The cash hit your bank account today. But did you earn it? No way. If you record that as revenue today, you are just lying to yourself. Until you actually cook that food and serve those guests in month 4, that $200 is a liability. It's a strict obligation called deferred revenue. Only when you do the actual work in month 4 does it magically transform from a liability into true earned revenue.
So let's bring this whole shebang together. What's the ultimate payoff for putting in the work to understand all this? Well, stepping up to accrual accounting transforms business chaos into a complete, deeply professional picture. It accurately measures your true profitability by matching your actual effort with your results. It actively forces you to track accounts receivable, who owes you money, and accounts payable, who you owe money to. And finally, it's quite simply the universal language of business. It's accepted globally under major standards like GAAP and IFRS, which are the global rulebooks for accounting. It is without a doubt the absolute gold standard.
Which brings us to my final question for you in this explainer. Will you stay in the dark, just blindly reacting to whatever your bank balance says on any given Tuesday? Or will you step into true financial clarity? Adopting the accrual mindset means you are no longer just guessing. You have the matching principle on your side, and you have the power to take absolute, totally clear control of your business metrics. The reality of your business is sitting right there waiting for you. The only question is, are you finally ready to look at it?